Hello, this is Frank Snyder, and I'd like to provide you with an investment update and kind of current market conditions. This video was recorded on Wednesday, June 10th, 2022. So I'd like to go over basically three things. What happened in 2022 thus far? What have we done about it? And then what is our strategy moving forward? So what's happened in 2022? Well, basically, this is the worst start through June since 1970, so not too exciting. The large cap growth sector, which has been the sector that has been performing extremely well for literally the past 10 years, large cap growth, according to Morningstar, and this would be as of this would be yesterday's number, 7/12, so today is 7/13. Is down 38.42%. So this is what that chart looks like. We've been in a free fall ever since the beginning of the year. So that is a pretty depressing situation, that's for sure. So what's the good news? What have we done? Well, early 2022, we rotated out of large cap value and more growth-oriented funds and ETFs and moved to more value-oriented, more conservative-oriented picks, defensive asset classes, and then also raised our cash position, meaning that we took a portion of everybody's assets and just put them into essentially what would be considered a money market account, an account that's not really making much, but it's not really losing any. So as the year progressed and everything continued to deteriorate, you've seen us move more and more defensive, generally speaking, and I have to speak in general terms for this video because everybody, it varies from client to client, your risk tolerance and time frame, and are you retired or not retired. But we have 50, 60, even 70% plus of many of you in just cash or equivalents. So this means that if the market is performing poorly, you're not losing at the same rate as the market. So this strategy allows us basically to wait and hopefully take advantage of low prices when the economy and the market improves. So let's look to the future. What does the future hold? With inflation running extremely high, the Federal Reserve is raising interest rates. So they raise interest rates to slow economic growth. This in turn drops the demand for goods and services, which in turn allows the supply of goods to catch up. And we've heard about the supply chain. So we had too much money chasing too few goods and services. And so prices begin to escalate. And that's what we've been seeing. So this should curb inflation in theory. The problem is that this strategy is not especially good for the stock market. When you own shares of a company, you want that company to grow and sell more and more of its product and service and not less. So our objective is to be patient. Sometimes minimizing losses and waiting for the opportunities is the best strategy. So we intend to keep everyone partially invested, if it makes sense, in asset classes that have the most potential, but for the near future, stay heavy in cash or cash equivalents. We must be patient. Nothing lasts forever. We've been through these cycles. The most recent for me, a really bad time was 2008, 2009. It took 18 months for the market to bottom, approximately 18 months. It was in mid-March. And then at that point, as I joke, the sun began to shine again, the storms were over, and things got better. So again, I don't know if it'll be 18 months or 8 months or 3 months or 3 years. Nobody knows. So we're watching diligently each day, each week, and looking for those opportunities. So again, we recognize this is your hard-earned money. Believe me, I go to bed every night and wake up every morning thinking about my clients. My clients are my friends, they're my family. A lot of you are retired. I know you depend upon this money. We're here for you and we're doing our best to protect and grow that money. So currently our job feels a little bit like paddling upstream, but if you're patient, if we're patient and well-positioned, we'll emerge from this. So we appreciate your faith in us and we'll continue to do everything in our power to earn that trust. And you have a great day.